Italy is helping itself climb out of a €2 trillion debt hole after attempting to sell off a euro target of €7.5 billion worth of government bonds at an auction. Well, this morning, the Italian Treasury actually managed to sell about €7.3 billion worth, marginally better than a similar auction last month. Well, with me on the line to discuss this in a bit more detail is Senior Analyst at Danske Bank, Peter Possing Andersen. Peter, thanks for joining me. Now, first of all, how was the auction received initially?
Well, if you compare with the previous auction results, we saw a bit better demand, a bit higher bid-to-cover ratio, and you also saw that the yield was lower. But I'll guess that this was pretty much as expected by the market.
Now, we've got the high-importance ECB meeting next week. What do you expect the European Central Bank to do in the Italian bond market?
Well, that is really the crucial question right now. We are waiting for the ECB next week, where they have the monetary policy meeting. We expect the ECB to do some purchases down the road in the short end of the curve, but we're still missing all the details. So I guess the market reaction will be very much dependent on the specific details that are coming out. And hopefully we'll get some information next week, but we're not even sure about that.
How, in your opinion, can long bond yields come back down in Italy and also perhaps Spain for that matter?
Well, provided that the ECB is only going to support the short end, that will, in my view, that will probably cap the long bond yields. But to get a permanent shift lower in the long bond yields, we need to see some positive results out of the economies in Spain and Italy. So we need to see some growth, and we need to see some of the budget targets being met and not only being postponed. So far we have, pretty negative experience with the budget targets. They keep breaking them and they keep postponing them. So it would be really positive news if down the road we get some better than expected budgets. But right now, the outlook is problematic.
Now, looking at Italy with the Eurozone in mind, we know it's got a large debt of around $2.5 trillion. What about Italy's viability in the EU? The country's got a lot of economical and structural problems beside its mounting debt, hasn't it?
Well, I guess Italy is, if you look at the budget, Italy is actually not that bad. They are actually running a pretty okay budget. The problem with Italy is that you have a problematic growth outlook. You have slow growth in Italy for many years. You have a demographic outlook which is not that good because population is growing older, and then you have the high debt level combined with that. So I guess that combination is what is making the market concerned. But I guess at the point we are right now, we have not yet passed the point of no return for Italy, so they can still manage to get it right. But it really demands that they have a tight reform schedule as we see now, and that they keep up the pace. That's the one point, and the other point is that we really need some clarity about what kind of support are the EU and the ECB going to provide to Southern Europe. We need more transparency and we need more credibility about that, and that is what we're hoping we will get during the coming months.
Okay, that's all we've got time for. Thank you for joining me, Peter, and sharing with us your views on Italy and its recent debt auction. I'll be back tomorrow with a Targets in Focus interview where my guest and I will be breaking down another selection of currency pairs in a bit more detail. But for now, goodbye.